The S&P 500, the Nasdaq 100. Now, when we look at the day, we're going to be talking about what happened with Powell, what he said at Jackson Hole, and ultimately the direction we're going to be trending for the next few days and weeks, most likely. Now, the first thing I will say, we're going to look at the price action. I want to give you a little bit of like a view of what happened on the day, right? So out of the gate today, we kind of see that initial push up. We push into 15,000, get rejected back down, right into Jackson Hole, all the way down to lows, 14.75, pushing back up into basically 15,000 and kind of end of the day here. Interesting behavior, right? Needless to say, Nasdaq did end the day around up 1% almost. Okay. Now, before we go into anything else, I want to ask you to do two things: like and subscribe. I just want to get us out of the way. Appreciate you doing so. The newsletter will be available on Sunday. It'll give you the details on the indexes and two stocks that we're liking throughout the week. So make sure you check that out. Now, what I want to do real quick, and for the basis of this video, is go over what Powell said and how I interpreted that information. I don't want to spend too much time on this video, to be honest. So I do hope you understand where I'm coming from and my viewpoint here. So Powell basically said everything that we kind of anticipated. This is just on fedreserve.gov. Very easy to find. Just look up, all you have to really look up is Jerome Powell, Jackson Hole, and then FedGov will pop it right up on Google. So you can actually read over his whole speech. The basis of what he said, though, 2% still the goal, right? He emphasized the issues that we're having getting inflation under control. He emphasized what's happening with the economy, stronger than expected. He emphasized the struggles in the housing market. And, he actually didn't say the housing market has bottomed, which was interesting to see. He emphasized what was happening with the labor market. All these things have been said. Ultimately, the conclusion is the part that I want to read to you above all else. As often the case, we are navigating by the stars under cloudy skies. In circumstances, risk management considerations are critical. Upcoming meetings we will assess our progress based on the totality of data. Who would have thought? And the evolving outlook and risk. Based on the assessment, we will proceed carefully as we decide whether to tighten further or instead hold policy rate constant and await further data. Restoring price stability is essential to achieving both sides of the dual mandate. We need price stability to achieve a sustained period of strong labor market conditions that benefit all. We will keep at it until the job is done. Pure inspiration. And you heard like his second to last paragraph that he said, or of his speech, 2% is and will remain our inflation target goal. So again, everything kind of stood the test. Now, what I will say is we're seeing the dollar, we're seeing yields react as expected. Okay, right? Expectations here. Well, this is go to the daily chart real quick. The 2-year yield rising to highs that we've seen locally since essentially last July. Or no, sorry, this is this July. I'm ridiculous. Sorry. So this past July, okay? This was our highs, 5.11. That was our 50. That was our highs of this whole time, this whole thing. I will say you look like you want to break out. Okay, that's where we're at right now. We're still making higher lows on yields. You still look decent. You look further out, the 5-year wants to break out. 10-year, deadly. 30-year, probably the only one that looked kind of terrible today. But what we're seeing as a trend here is the 10, 30-year, red on the day, 2 and 5, green on the day, not a good sign. The inversion also at about 99% inverted, 1% off from being fully inverted. Going into energy as well, energy pretty green on the day. But again, we won't talk about that too much until we get to further data. Obviously, the dollar was the highlight here, breaking out, holding above, and pushing up. The resistance 104.6. Okay. Again, I don't want to spend too much time on the charts here, but I will say very strong hold, pretty solid. Not bad, okay? Not bad at all. We look at ES, you held above 44.07. In Q, you almost held 15,000. It was still a good hold where you held. Really strong bounce as well off of 14.8 and a good mount. I shared something for Discord earlier in the day or near the end of the day. And this was basically it to summarize. Okay. This was last Thursday selling. This was Friday of last week. Upside. And then the rest of the week you had upside. This Thursday, a lot of selling. Friday today, buying again. Very similar price action, what we're seeing. I don't want people to get too caught up in where we're at. And as unfortunate as it is, I don't think you have a clear-cut direction. But what I will say is Powell put a lot of pressure on this data that's coming. If you watch Jackson Hole as well, I do believe his underlying tone was hawkish on the economy. That's just what I got from it, how he was addressing it. I will say it was a speech, so there was no questions or anything along those lines. We have to wait for September for that. So when we look at what's happening here as a whole, I'm sorry, I'm pretty zoomed in here. Let me actually pull myself back a little bit. Sorry. As you can see, we're at a pretty big inflection point. And we've kind of put a lot of emphasis on what's going to happen at this next PCE reading and CPI reading. So it's important that we are paying attention to those data days. PCE data will be this coming Thursday. Very important to know. And then not this Monday, but next Monday is Labor Day. So it's a 3 or 4 day weekend. I need to make sure how long it is. I don't know if we get Friday open either. Need to make sure. Either way, it's going to be a long weekend, so definitely worth mentioning and paying attention to. We look at SPY. Again, I have and still am very concerned about this. Okay, everyone's still talking about the head and shoulders, what's happening here. Again, I agree. I see it. It's playing out. It looks really nice. Looks really clean. I get it. But my concern here is we are seeing aggressive shorts start to try to stack in, and we can still have the same reaction that we had near 42, 42.50 on ES. That's a major concern for me, specifically with something like NVIDIA. NVIDIA got hammered after earnings. Now, granted, you all know my opinion on NVIDIA. Their earnings, especially this past quarter, the best earnings we've ever had. I think one of the best stock earnings, or at least, back-to-back earnings, potentially of all time. I mean, what they're doing is incredible. I believe, right? And again, this is what I keep saying. With the Nasdaq especially, a lot of the movement is dictated recently by semiconductors, okay? Semiconductors, a lot of weakness early on, and it really held the Nasdaq down. That's why we weren't getting a lot of that upside when we originally were getting the bounce, right? But then AVGO and NVIDIA found a bottom and started bouncing. I'm going to tell you right now, there is a lot of short side pressure on NVIDIA and semiconductors as a whole. Now, in my opinion, those earnings numbers, they do potentially justify for some upside potential. So the concern here is that we could start seeing some shorts covering if we start to see more upside. And I do not like at all the sell side reaction here. Granted, it was a Friday. Okay? I benefit of the doubt. It was a Friday. But my major concern going into September, going into these more data pools and what's happening here, if PCE comes out good, again, we've seen oil prices kind of stagnate. Gas prices are up on the quarter. But if PCE somehow manages to perform well, again, it leads me to believe we could see a large amount of shorts forced to cover once we hit certain levels. And again, it pains me to say it, but these are just things you have to be able to identify. And I hate when we get into periods of it like this, where we just don't have clear direction. But once again, we're doing it. Sorry, it is what it is. Even when we broke down from yesterday, I mean, we got back below 14.8. This level here, guys, is very illiquid right here. This whole level from 14.85 basically down to 14.7. Very illiquid. But we're just bouncing in this area. You're seeing random amount of buyers step in. There's no follow through. We all know how I believe about volume and follow through. Look at the volume on the day. 101 million volume stepped in. Now, I will say in the first hour of trading, you had 40 million volume, so it was incredible. But that being said, buyers stepped up near the end of the day, especially in the after hours as well. So it's important to realize where we're at. I'm not saying you have to continue moving up or that you're going to, but the bulls had the best case scenario for this. Okay, I'm just telling you that right now. This was the best case scenario for the end of the week. I didn't see a case for you to blow past 15K and keep running unless Powell said something really great. But we had that initial selling yesterday going into today, and then we had a decent bounce on the day. Very, very, very interesting behavior across the market as a whole. And it puts me on my heels more than anything here, because I think day trading here is stupid. I think it's you're in a clear consolidation period. This is one of those no trade zones. It's as simple as that. Maybe I'm just not as skilled of a trader as I need to be. I'm fine saying that right here, but this right here, I hate it. I absolutely hate it. You haven't put in a lower high or a lower low, I'm sorry, on a weekly chart yet. It's important to realize that. You start to break below around 14.5, 14.4, then you get some concerns, okay? And then possibly then we get to talking about this illiquidity down here. But until then, you need to be patient here. Especially, and it's unfortunate that I feel like we're sugarcoating things with the Fed. And we're kind of trying to delay the inevitable, but it is what it is. You can't do anything about it. I still side with my opinion on some of this data. I think PPI was very worrisome, but we still need to watch out for PCE. The Fed basically said, Powell basically said, PCE is essentially all they care about. They said it again, right? We've heard this thesis, PPI, CPI, backseat to PCE. PCE is king. PCE is what we want to watch. We don't care about, and he said it too. We don't want to see the effects of energy. We don't want to see the effects of food. I'm just like, okay, whatever. It's still going to see the effects on the entire market with what's happening with inflation, and based on this, energy is what shot this, through the roof in the first place. But again, that's the view here from this. I'll have a lot of updates this weekend going on my Twitter. If you want to get a recap of some of the highlights from this as well, go to Twitter. I've pretty much marked out most of these things that I found the most important. So they're all there. You'll see it all tagged with Fed Pal. It's on Twitter. The link is down below. Again, if you have questions, comment down below. Shorter video, not exactly how I do most of my videos. I just want to give a little bit of recap, how I'm feeling about this. And I'm telling you right now, this movement here, the move into the end of the day was not ideal. It was not good. For a downside, you got a really nice bounce back from buyers. Really nice reaction with volume as well. That's my opinion. That's how I'm looking at this. If you have questions, again, comment down below. See you tomorrow.